Many are asking why major testing companies are pouring hundreds of millions of dollars into new exam systems, while chip makers like Intel struggle under the weight of rising spending on artificial intelligence. Both stories reveal a deeper shift in how the global economy is preparing for the next labor cycle. Recent reports indicate that major global testing providers are preparing to invest roughly $500 million into new systems for administering standardized exams, such as the GRE and the TOEFL. Industry analysts say the move is intended to modernize test security, expand international testing capacity, and integrate digital proctoring technologies that were accelerated during the pandemic. The funding also suggests that the global credentialing market for graduate study, professional certification, and English language verification remains resilient despite major changes in higher education and immigration policies. Standardized exams continue to play a critical role in matching talent to academic programs and employment pathways. Graduate admissions offices rely on GRE scores to differentiate applicants in quantitative fields, while TOEFL scores remain widely used as language competency proof for international mobility. The expansion of test delivery infrastructure signals that providers expect sustained or increased demand from students, universities, multinational employers, and immigration authorities. Industry insiders point to three drivers behind the $500 million testing initiative. The first involves security and integrity. With the rise of remote test-taking, companies are integrating artificial intelligence to detect fraud, biometric anomalies, and identity mismatches. The second driver is accessibility. Major testing companies are racing to increase availability across regions that were previously underserved, including South Asia, Southeast Asia, the Middle East, and parts of Latin America. The third driver involves data. Testing companies have discovered that the value of their products extends far beyond exam fees. The credentialing data they collect is increasingly valuable for workforce analytics, immigration modeling, and institutional planning. At the same time, new competitors have emerged in the credentialing space. Technology firms have introduced micro-certifications in software engineering, cybersecurity, cloud computing, and data analytics. These programs, often developed by companies like Google and Microsoft, provide an alternative to traditional degrees and standardized tests. While these certifications serve different functions than the GRE or the TOEFL, they compete for the same population of aspirational learners who are navigating global labor markets. Testing providers are therefore repositioning themselves not merely as test administrators, but as infrastructure platforms for talent verification. This shift coincides with a global tightening in immigration rules, where governments seek more structured proofs of skill and language competency. It also coincides with the rise of remote hiring, where multinational firms evaluate candidates based on standardized indicators rather than local references. Against this backdrop, Intel's recent share decline appears at first glance to be unrelated. However, analysts argue that both stories reflect the same underlying phenomenon. Global labor markets are being reorganized around artificial intelligence. In Intel's case, investors reacted negatively to the company's announcement of higher capital expenditures related to AI hardware and data center demand. While the demand for accelerators and compute infrastructure is rising, the cost of building new fabrication plants, upgrading lithography processes, and scaling supply chains is enormous. AI workloads require specialized chips that go beyond traditional CPUs. Competitors such as NVIDIA and AMD have capitalized on this opportunity more quickly, capturing early market share for AI accelerators and training hardware. Intel is now attempting to catch up, and that requires spending. Investors typically reward growth in high-demand sectors, but penalize rising costs when returns are deferred. The immediate market reaction to Intel's announcement illustrates the effect of short-term valuation models that prioritize gross margin preservation over long-term capital investment strategies. Despite the negative market reaction, some analysts argue that Intel has little choice but to expand spending. Artificial intelligence has already altered the economics of cloud computing, semiconductor production, and data infrastructure. Companies that fail to secure positions in the AI supply chain risk strategic irrelevance within a decade. For Intel, the question is not whether to invest, but how aggressively and how efficiently these investments translate into market competitiveness. This is where the connection to the testing industry becomes more visible. Artificial intelligence is altering labor markets faster than educational and credentialing systems can adapt. Chip makers like Intel must invest billions into infrastructure to enable AI. Testing companies must invest hundreds of millions to measure skills that AI will increasingly demand. Both sectors are investing to define who will be qualified to work in the next economy and who will be left behind. Universities are also part of this equation. STEM graduate programs rely on GRE scores to filter applicants for engineering and computational fields. These students often form the future talent pipeline for semiconductor companies, AI laboratories, and cloud computing firms. Without standardized ways to measure preparedness, both universities and employers face greater uncertainty in admissions and hiring. Moreover, governments are becoming more dependent on credentialing data to regulate immigration and workforce policy. Countries such as Canada, Australia, and Germany have begun to create points-based immigration systems that prioritize applicants with STEM credentials, language proficiency, and professional certifications. Testing companies stand to benefit from this geopolitical shift as credential verification becomes a gatekeeping mechanism for labor mobility. From the investor perspective, Intel's decline highlights the financial tension between growth markets and capital intensity. Artificial intelligence promises extraordinary returns, but requires vast spending across fabrication, energy, and research. Testing companies face a different financial dynamic. Their investments are smaller, less risky, and likely to yield steady returns as long as credentialing demand persists. Whereas semiconductor firms operate under heavy capital expenditure and cyclical volatility, testing firms operate under lighter capital structures and countercyclical demand. Despite differences in scale, both sectors rely on the same fundamental resource, human talent. AI will require massive numbers of engineers, researchers, linguists, data annotators, cloud specialists, and security professionals. International graduate programs, immigration systems, and professional certifications form the pipeline for these roles. Testing companies that facilitate these transitions occupy critical terrain. Semiconductor firms that power AI represent the technological endpoint of that terrain. The broader implication is that the knowledge economy is restructuring around credentialing and compute capacity. One sector sorts talent, the other equips talent with the computational tools of production. Investors are placing bets not only on which companies will profit, but which countries will control these labor and hardware pipelines. Analysts caution that if testing companies fail to scale, the global labor market could fragment. Talent mismatches, visa delays, and credential recognition disputes could slow deployment of AI capabilities. Conversely, if semiconductor firms fail to scale, AI workloads will bottleneck. Training large models requires enormous computational resources, energy, and fabrication precision. A shortage of chips would slow innovation and constrain productivity gains across industries. In the near term, Intel faces market headwinds while testing companies face expansionary opportunities. In the long term, both sectors are interdependent components of a larger transition toward an AI-mediated workforce. Countries with strong education systems, pragmatic immigration policies, and advanced semiconductor ecosystems may capture disproportionate economic gains. More updates may follow.